Be Wealthy and Smart, episode 1158.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why IRS refunds may be lower and the new electric vehicle tax credits. We're right in the middle of tax season, and the IRS has already issued nearly 8 million refunds worth about $15.7 billion as of February 3rd. The average refund amount is $1,963, down from last year's average payment of $2,201. While the IRS warned refunds may be somewhat lower this season, experts say it's still too early to know for sure. But the IRS said they processed 29% more returns than last year, which included nearly 8 million refunds compared to about 4.3 million last year. So that's about 85% more refunds issued, and the larger number of payments might be causing problems just because of the sheer number. Bill Smith, National Director of Tax Technical Services at CBIZ MHM, said, "I think the processing percentage is very telling, noting that the IRS may be more efficient without added pandemic duties and a smaller backlog of unprocessed returns. The agency kicked off the tax season with a bigger customer service team and enhanced technology as it begins to deploy its nearly $80 billion in funding that Congress approved last August." Smith said he's curious to see how quickly refunds will reach electronic filers this season. That's the one statistic people really want to know, he said. Typically, you can expect refunds within 21 days when filing an error-free electronic return with direct deposit for payment, according to the IRS. And if you check for all the details on your return, including the correctness of your address, your social security number, and your direct deposit details, that can really help to avoid any unnecessary delays. You can check your refund status with the Where's My Refund online tool through the IRS 2GO app, IRS 2GO. It's an app. But you'll need to wait 24 hours after electronic filing your 2022 return and 3 to 4 days after e-filing a 2020 or 2021 return. And paper returns may take up to 4 weeks for a status update. If you're planning on getting a tax refund, it may be somewhat lower than last year's payment, according to the IRS. Typically, you can expect a federal refund if you've overpaid yearly taxes or withheld more than what you owe. And one of the big reasons for smaller payments this year is expiring pandemic relief, which was delivered via tax breaks for 2021 returns. According to a Credit Karma survey, many Americans are still struggling financially, with nearly 1/3 relying on their tax refund to make ends meet. Joe Berman, a certified financial planner and senior financial planning consultant at eMoney Advisor, said smaller refunds and high inflation may be a double whammy for some families. There are several reasons why your 2022 tax refund might be smaller and be a nasty surprise when you file your returns this year. Thanks to the American Rescue Plan of 2021, many families got a boost from the Enhanced Child Tax Credit, which was worth up to $3,600 per child, and Child Independent Tax Care Credit of up to $4,000 per dependent. But those tax breaks have returned to previous levels. For 2022, the child tax credit dropped back to a maximum of $2,000 per child, and the Child Independent Care Tax Credit reverted to $1,050 per dependent. However, if you didn't receive your third stimulus payment, there was a chance to claim it on your 2021 return. Another pandemic-era change was a more generous charitable deduction in 2021, allowing filers a $300 deduction for single filers, or a $600 deduction for married couples filing jointly, even if they didn't itemize deductions. According to Tony Molina, a certified public accountant at Wealthfront, while there aren't many ways to increase your refund or trim your tax bill before the April 18th tax deadline this year, but you may still have a few options. One easy thing is you can still contribute to a traditional individual retirement account and have it count for last year, which may offer a tax deduction. Your eligibility for the tax break depends on your income and workplace retirement plan participation. There's also still time for health savings account contributions for 2022, which also offers a deduction, assuming you have an eligible high-deductible health insurance plan. The threat of audit is something that many people worry about in the back of their mind, but the good news is the audit rate won't rise for those making under $400,000 a year relative to recent years. During fiscal 2022, millionaires faced a 1.1% chance of an IRS audit, according to a recent report from Syracuse University's Transactional Records Access Clearinghouse. One tax credit that's been a little bit confusing is the electric vehicle tax credit. The IRS is expected to issue guidance for the clean vehicle credit in March. The rules, which carry requirements for car batteries, may temporarily limit which cars qualify for the full credit value. Getting a $7,500 tax break for the purchase of a new electric vehicle will likely get harder in a few months, meaning prospective buyers who want the financial incentive may wish to speed up their timeline. The Inflation Reduction Act, which was signed into law by President Biden in August, tweaks the rules for an existing tax credit associated with the purchase of clean vehicles. The law, which extended the tax break through 2031, changed some requirements to get the full $7,500 value of the clean vehicle credit. Some tax and auto experts think the tweaks, largely intended to bring more manufacturing and supply chains within U.S. borders and those of allies, will temporarily make it more difficult to qualify for all or part of the credit. Consumers who are in the market for a new electric car, truck, or SUV likely have a limited time within which they can more easily claim the tax break. There's almost like a 3-month grace period, Leslie Gentarasamy, managing director of the energy program at the Bipartisan Policy Center, said. Manufacturers have identified 27 all-electric and 12 plug-in hybrid car and truck models that qualify for the tax break, based on existing rules, according to IRS data as of January 17th. And buyers must also meet criteria like income requirements. Tesla cut prices on some car models this month, helping them qualify for a tax break. There will likely be additions to the vehicle list in coming days and weeks, the IRS said. After IRS guidance comes through, Gentarasamy said, "I don't think there's any doubt the list of eligible car models will shrink in the short term. If that happens, though, consumers instead can get a separate tax break for buying a used electric car instead of a new one, or perhaps by leasing a car." And the all-electric vehicles that may qualify for a $7,500 tax credit include the Cadillac Lyriq, Chevrolet Bolt EUV, Ford Mustang Mach-E, Nissan Leaf S, Nissan Leaf S Plus, Nissan Leaf SL Plus, Nissan Leaf SV, Nissan Leaf SV Plus, Tesla Model 3 rear-wheel drive. But these vehicles do not automatically qualify for the clean vehicle tax credit. Manufacturers identified these vehicles to the IRS as meeting the requirements to claim the credit, but buyers should ensure all criteria like income requirements are satisfied. The clean vehicle credit is a non-refundable tax credit that essentially means buyers only get the full benefit if they have an annual federal tax liability of at least $7,500. Buyers can qualify if the new plug-in electric or fuel cell vehicle is placed in service after December 31st, 2022. A car is placed in service when the taxpayer takes possession of it, the IRS said, and that may differ from the purchase date. A few other things to think about in terms of requirements. Married couples don't qualify for the new vehicle credit if their modified adjusted gross income on a joint tax return exceeds $300,000. The limit is $150,000 for single tax filers and $225,000 for heads of household. Buyers can use the lesser of their income in the year they take delivery of the car or the prior year. Also, the vehicle price. The credit is unavailable if a manufacturer's suggested retail price exceeds $80,000 for vans, sport utility vehicles, and pickup trucks, or $55,000 for other vehicles. And manufacturing. The vehicle must have undergone final assembly in North America. Buyers who have a car's vehicle identification number or VIN number can consult a U.S. Department of Energy website to learn if it qualifies. There are also plug-in hybrid vehicles that may qualify for a $7,500 tax credit. There are other options available for buyers if the current list of eligible vehicles is shortened come March. Households can buy a used clean vehicle and may get a tax break worth up to $4,000. That tax break, which became available January 1st, comes with some requirements for car and buyer, but are generally less stringent than the ones for new vehicles. Additionally, it's possible dealers leasing clean cars can pass on some tax savings to consumers. In this case, a dealer claiming a tax credit for commercial clean vehicles might pass on some of its $7,500 tax break in a lease agreement or as a break on the down payment, for example. This commercial credit isn't subject to income, battery, assembly, or MSRP requirements. However, consumers should ask dealers before leasing, since it's not a given that such entities would qualify for a tax break or pass on money to consumers in a lease. So lots of things to ask about before you get the tax break, things to check up on the website, do your research. But it sounds like there's some good opportunities for tax breaks if that's something you're looking for and a clean vehicle is in your future. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.